How long does that process take from first meeting a startup, seeing that first deck, going through what you just mentioned? How long is that process?
Yeah, I mean, the process can take many, many years to work with an investor, especially if you're an early stage brand. It is a marriage. It is a legally bound agreement between you and these investors, and you will be working with them for, who knows, 2 years, 3 years, 5, 10 years, potentially. It depends on the stage of their business, and it depends on their ability to grow, how quickly they grow, and then hitting that inflection point where a big company like Diageo might want to acquire them. So it could take a very long time.
Let's get into some of the practicalities of this, because I think there's probably people in the audience like, right, I want to know how I get these successful pitches accepted. First of all, how do people connect with investors? Because it's not all venture capitalists either. What advice would you give for people connecting with investors?
Yeah, I mean, I tell founders also, when you're connecting with investors, you should do your research on the investors. You can't just pray and spray and pray and spray, and connect with anyone, because, for me, I might only invest in beverages. So if you're like a potato chip company, like, it's a waste of your time to outreach to me. So for me, I always just tell people, make sure you do your own due diligence and research and study the market a bit around how and who you should be contacting. And I like to tell founders, if you have a product that you admire, or a product that's in your space that's like doing well, has raised good capital, has some strong upward trajectory, you should look at which investors have invested into their brand. And then look at those investors' websites to see what other companies they invest in. And you can just kind of continue to kind of see all of the types of companies and the journeys of these, the investors that are in their capitalization table, that have invested along the way. Because sometimes, people they just know about a couple of famous VCs, and they don't know like all of the folks that are behind a lot of these investments. So to do that research is really important. And then, having connections somehow to that investor. Maybe you don't know them directly, but maybe you have a friend or a colleague or a peer in the industry, or you see they're going to speak at Lengua or some other conference, and you go
session at the end of the day.
Yeah, and you go and you stalk them. Like, there's that real in person, that real kind of warm connection intro that makes all the difference, because investors get inundated with.
I was about to ask about the cold approach, which I guess is the shotgun approach, sending a lot of emails out. How many of them do you actually reply to? Because your inbox must be full of that.
Yes, I do. So I try to look through everything, but I also, like, the first part of what I said was people don't even research what I do. So I'm getting like companies that are completely not relevant. So as soon as I see one like keyword that's like, okay, they obviously don't know what I do, or this isn't even a company that we would invest in, then I don't even read it. So, but if it is something relevant, I will dig in a little bit. So onto that point is, if you are having an intro where you do the outreach, make sure that it's relevant and that you're sending something that will catch their eye, so that they'll look a little bit deeper and like Google you, or look at your website, look at your LinkedIn, look at something, because investors do respond in that way. But investors are very busy, so you need to make it really easy for them to digest very clearly what you do, what your value proposition is, why you're reaching out. I have a lot of people just connect with me. They're like, I want to connect with you, because we have all these connections. Okay, but like, why?
Yeah. What's
Why? So yeah, make sure there's like a why, there's a draw.
So once I've done that due diligence, once I've found the investor that matches me, once
Yeah.
I start to reach out, once we get to that time of like, I'm giving you an investor proposal, what are the rules there? Let's say,
Yeah.
what are the mistakes people make? What should they be including? What does a good pitch look like to an
Yeah.
investor?
Yeah. For a good, you should also prepare some materials that investors are familiar with when it comes to like a pitch deck, a short pitch deck or an executive summary, and that short note or blurb that you can include in LinkedIn or email, so that they are interested from the get-go, and then B, they open that deck or that executive summary and try to learn more and scope it out more, and then reply back with yeah, I'm interested, I would like to then make a connection. So it is important. Also, all of you are in the consumer facing space, so you have these businesses that represent a story, that represent, how to attract your consumers. So that's the same way you should think about approaching investors. Like that, they're a consumer in a way too. So if they're not compelled by what your business is doing, they're not going to invest either. So creating that nice deck that's even small things like nicely formatted, the design
Sorry,
aspect.
what? Formatted what?
Nicely formatted.
Nicely formatted, sorry.
Yeah, like, professional, shows a brand aesthetic of whatever it is you're building is very important because most of you are consumer facing brands or restaurants and small businesses. So showcasing, like really showing off and highlighting like what makes your brand so appealing to your end customers is also something investors want to see. Of course, investors are doing this because they want a return. So making it easy for them to understand that too for your business. What is the long-term return that they'll get out of it? And also making sure that you can talk to the financials of the business, which I know is tough because you're running a day-to-day business. So it's hard for you to be like, okay, let me pull up like a profit and loss or, let me pull out show them what my cash flows are and my margins and all this stuff. But metrics are very important for investors, whether you can just show, and it can be very simplified version. You can just show, here are the revenues I've had year over year since we've launched. And it's showing this great trajectory, which is why, you should invest. My margins, gross profit, gross margins, my costs are coming down. My gross profit is coming up. So showing trends that you're also improving the efficiency of your business is very important too. You don't have to be profitable because that's why, you're raising capital, because you're spending probably more than you're making in the beginning as an investment for that business to long-term have that profitability. So that's fine. But to show the investors that you have a plan, like what am I going to do with the money that I'm trying to raise from you? And then where is this business going to go over time? So that, you can show that you will be a good stewardess of that capital, and you will return them something because that's what they're looking for. And to show that aspect of your business is very important too.
What mistakes do you see again and again? Is there obvious mistakes that people make when they're at this stage of the process?
Yeah. I mean, so definitely there's the mistakes of like not not preparing and not doing the research yourself. There's also
Why did you point at me then?
I'm just reiterating what I said earlier. So and one thing I also should mention for the part I mentioned about that it's a marriage with these investors. It's a very long-term relationship. You're going to work very closely with them. So a lot of people also make mistakes around the investors that they do bring in. Some investors are not that friendly to their founders. Some investors are maybe they'll take a board seat where they'll become advisors and they might institute some changes to your company that you don't agree with. So
Is there a way to protect yourself from that type of stuff? Because other than judging a character well, which, you know, we can all get wrong and we all do get wrong, are there other ways in which you protect yourself in that scenario?
yeah, I mean, if you are getting closer to an investor and you think they might be someone that you'll bring in, you should actually ask them for references. And
And that wouldn't, because I think as the person seeking investment, I'd feel a bit nervous saying to the person with all this money that I'm asking for, hey, have you got references? That would be quite you wouldn't be offended by that question.
no, you should say, what other companies have you worked with in a similar space that I can speak with? I would love to hear their experiences. Obviously, you can ask them, what is your value add as an investor for my company? Like what, learning about what they bring directly from them, but also talking to companies that they're already working with and seeing the experience that these other companies have. You can also, I mean, you could see a lot of investors will have websites that show the other companies they invest in. They also will oftentimes have press releases or news or blog articles or tweets or whatever that announce, we co-invested with this other investor, or this other investor. You can also call on their other investors to see, how things are, just like the general like reputational piece of how things are. And you can always kind of Google and see how things are too. And a lot of VCs, investors like to tweet. They like social media. They do a lot of talks and stuff. And you can always kind of back channel them that way and kind of understand like what's their messaging, what is their personality like. It's just like what you would do if you were to date someone. You would really want to do the research about them and really dig in on everything and their public image or Google search their in social media, really kind of dig into that person, because that person is potentially a much longer relationship than like a dating relationship even.
I'm glad you still call it tweeting. Me too.
How do you
I
say
refuse
Xing?
to call it Xing. Yeah, it's so weird.
Truthing?
Is that what they want? Truthing? Oh, God. Have you got examples of brands that you're really excited about that you've invested in recently? And what was it that caught your eye as an investor with those brands?
Yeah, we have some exciting brands. It's funny, the founder of Jaguar's son yesterday,
Yeah.
the beverage program topic, obviously that was super relevant for me. And he said like agave spirits are very hot. So we have done some in tequila, and we're diving even further into agave spirits as well. The no alc, low alc is a
Huge.
huge category, huge trend. So we're diving into that. One of the companies we have invested in is called Ritual Zero Proof, and it's the number one non-alc spirit in the U.S.
Nice name. Great name.
Yeah, ritual. Yeah, it's the ritual of having a drink without having alcohol, because they make exactly 5 SKUs that's a replacement for gin, whiskey, tequila, rum, and aperitif. So if you're just going to have margarita and you want it a non-alcoholic, you just use exactly the same amount of ritual tequila as you would a regular tequila. And it's a quite good cocktail concoction. So that one we've put dollars to work in. We invest in them very early on, and they've just done tremendously. So that's one of our growth stage, later stage businesses. We also have a fund that we launched during COVID for underrepresented founders, which are, I think a lot of people probably in this room actually. So That one we will go in with 3 to 500K checks at an earlier stage. And one of the recent investments out of that fund is a brand called Ume Liqueur, and it's a purple. It's a plum. Ume is like purple. It's like a plum, Japanese or Korean Asian plum, and it's a liquor made out of that. And it's a purple color, and it's like just a really cool like brand and look and aesthetic, female founded.
And putting myself in the shoes of the person seeking investment, what's your value add?
Yeah. So there's also I work at Diageo, which is a big Fortune 500 business. So this is our corporate venture capital team. There's also just traditional venture capital teams that do not come from out of a corporate. They have their own funds, like, you may have heard of like, I don't know, like Andreessen or like Union Square in Miami. There's like IDC, Fuel Ventures, stuff like that. And the difference between a corporate venture capital and a traditional venture capital is the corporate venture capital is, our parent company is backing it with both resources and capital. Versus traditional funding, venture capital fund, they raise a bunch of capital from tens of investors to hundreds of investors. And then they have to raise capital every 3 to 5 years. And they have to keep raising and raising every time their fund is depleted. Versus corporate, it's kind of evergreen. It continues because it's just the corporate writing checks, the large corporation writing checks. So for us as a corporate venture capital, not only do we provide capital, but because we're strategic in investing in brands that we could potentially have a long-term relationship with, we have a very long-term horizon in terms of what we do with the brands. We actually have a 30-person team called Diageo Ventures, which is independent from Diageo, but Diageo is the backer of it, and we invest through that entity. And their 30-person team that supports our portfolio companies that we invest in day to day, and they help with all kinds of activities, whether it's like sales or marketing, whether it's on consumer insights, whether it's to help make connections or better understand distribution strategy. They can help with all kinds of different types of things that startups and founders need. So we're very strategic, and we're very long term. So we have the ability to really come in and add that value. And then, personally for me, because our scope is, we can't invest in everything that I want to, so I still meet a lot of food and beverage founders generally, because it's a very connected industry where, if I don't know, if we can't invest, maybe I'll introduce a beverage startup to Pepsi or something, or a food company. So it's always good to kind of get to know investors, even if they're and chat with them if they have the time, or if you have the ability to get in front of them, because the investors are very connected, and that's like a big value add too, whether they invest in you or they don't invest. Having that network that they can leverage is really, really valuable.
And I want to leave a little bit more time because I'm expecting a few more questions from the crowd, so we're coming to you soon. My last question to you before we open up to the crowd is, for you, what's your most successful investment? So
previous to the Diageo, before Diageo, I joined Diageo about a year ago. I was at SAP, which is enterprise software, the ERP business. So I spent most of my career actually in like tech finance.
Is this where we find out you own like 20% of Facebook or something?
No, I wish. If I did that,
we wouldn't be here right now.
So, yeah, I mean, at SAP, I had actually a lot of companies that exited. about I sourced. We also had the accelerator program, so that I ran, and I sourced probably like 50 companies while I was there, and about a quarter of them were acquired, including one that I think was probably my most successful, but I don't know that it's super public.
Oh, okay. Yeah, a lot of this is confidential. I understand. Let's come to the crowd. This is your opportunity to speak directly to an investor. I don't want any pitches, even if it's drink related. But what questions would you ask?
It's a two-part question. One is, for your investors, how many of them are looking really just at the bottom line of numbers, or are they also, how many of them are looking at like the company as a whole, as who the founders are, what they're doing, how they're supporting the community and everything? And also the second part of the question is, how much generally are the investors looking for in return?
Yeah, so we don't only look at the bottom line, and if the investor only looks at bottom line, it's probably not a good fit for you, because there's so many things about business that are beyond that. We look at everything. We look at who the founders are, the product. Earlier was mentioned like the story behind the business and staying true to that story. We look at the operational efficiencies of your business and the financials, the market potential of how this product can potentially grow. Because there are some like more niche categories that we're not sure about, so that we'll be more conservative about. But if it's something we see, okay, it's definitely a multi-billion-dollar market, that's very important for us. So yeah, all aspects of the business are very important. And then depending on how, like, the stage of the business and how things are going, we might suss out if it's a more riskier investment or less risky investment. And based on that, it also determines our valuation or our risk appetite and how much we want to invest. So all of the factors matter for an investor. And then for us in particular, since we look at brands that we think could get acquired one day, we look at that potential too. That's very nuanced to my company. And for the type of returns, that depends on the investor as well. For us, we're more of a strategic investor. So while we do look at the benchmark of our returns against traditional venture capital, our priority is actually just finding great brands that can be multinational, incredible additions to our portfolio. In venture capital, like, some of these investors are looking for like 2 to 5x returns, especially if they come in at a very early, very risky stage. And then private equity, it might be a little bit less. And then there's some companies that maybe they're just looking for like more stable returns. So you kind of have to. There's not like a formula of what everyone is looking for.
When you say about the story for the investor, what exactly is about the story of the business when they start, or their product?
Mm-hmm. Yeah, because we'll see hundreds.
Is the concept?
We'll see like hundreds of tequila brands a year. Mm-hmm. So we have to choose like one or two to invest in it in that year. So we have to really be very intentional about which one we pick. So a lot of the products, like the product itself has to be great. That's like, the minimum. Mm-hmm. But then like having like the other parts of the business, and then the story is also what's really unique. Like whether there's like a family origin, whether the the founders have been serial entrepreneurs and they built incredible business already, and now they're starting this next one. Whether it's like they've done something super innovative that's different, but the story is what makes a brand really different and what makes a brand really pop with consumer base and the market. Because it's a very competitive space, food and beverage, CPG, very, very competitive. So you really have to somehow stand out. And so, I mean, I think some of the best brands also like that are famous now, they came with some kind of story that resonated, like some of the stories that we heard today and yesterday too. Like this is why some of these companies and restaurants have done really well is they weren't just like, I built this because I wanted to make money and I wanted like a quick exit from a VC or to sell it. They like really brought in a lot of passion, brought a lot of like special skills, brought a lot of like just love and like uniqueness into it. So it's hard to explain like what is a story, but every story is different and unique. And that's what also makes that company really stand out for us.
Thank you very much. Please, let's thank Sallie.